Happy Tesla stock all-time high day to those of you who celebrate. Wait, didn't I just say that the other day? Oh yeah, no, I did say that the other day. And while I was saying that the other day, I also said I'll probably be saying that again before the year's out. And here we are. Look at this. Tesla stock up another 6% today, closing $463.02 per share. Market cap now, let's call it $1.5 trillion, flying past $469.20 after hours. Now, I just want to put this in perspective. From Tesla's all-time high closing price in November 2021, 3 years later, we're only up, call it 13 or 14%. That valley on the price chart there, by the way, over the last 3 year period, I think if you look up the word opportunity in the dictionary, you'll find an illustration of this chart. Now, I have a few predictions I'm going to discuss in today's video, not relating to Tesla stock. I mean, I think still 10 plus years into the future, we're going to look back and go, damn, was only $1.5 trillion? Really? Is that decimal place in the wrong? Shouldn't it be one thing over? Shouldn't it be like... But I don't know what's going to happen over the short term. My brain's nowhere near big enough. In fact, there is no brain on Earth big enough to know what's actually going to happen over the short term. But understanding humans and psychology is a hell of a lot easier than predicting the collective buying and selling activity of every participant in the stock market, which is what drives the price of a stock one way or another. Here's what I think is going to happen. And by the way, I've already made this prediction, but I'm just going to keep saying it until it plays out. One after another, analysts on Wall Street, whose average price target on Tesla stock when I recorded my video yesterday was $266 per share. Let's just check, in fact, maybe there's been some changes already. One after the other are going to start massively increasing their price targets, reverse engineering a reason that sounds semi-reasonable as to why they made the change, instead of just admitting we had no idea what the company was worth, and 6-9 months ago when the stock was 150, 160, instead of us having an extremely apparently bullish call, saying the stock was probably worth 2, 3, 4 times what it's currently available for, we had a price target within 5 or 10%, we're just going to magically say, well, Trump means Tesla's worth 3 or 4 times as much, increasing price target dramatically. But now that there's one or two analysts, Dan Ives, who's come out and leapfrogged the previous high on Wall Street, which was $421 per share for Tesla, now he's at $515. That's going to give permission to many of his colleagues on Wall Street who lack the testicular fortitude to themselves display any form of courage and go out on a limb with what appears to be an absurdly high price target back when the stock's 150, 160. Now that Dan's at 515, suddenly they can start bumping it to 420, 450, 485, 500, and no one's going to give a shit. So let's have a look at these average price targets from analysts. Again, 266 yesterday. Let's see if there's been any changes overnight. Same shit, no change. So my prediction is tsunami of price target increases in the coming days, weeks, and months. Let's see what Dan Ives has to say.
Technology research at Wedbush with me here at Post 9. Nice to see you, man.
Great
Welcome.
to see you.
Should we be surprised at all at the fact that these stocks are once again surging, that they're hitting in many cases new highs almost every day?
I think it's get the popcorn out, because it's just the start of what's going to be the AI revolution as the second, third, fourth derivatives play out. And me and you have talked about it. Trump administration in. That's a Goldilocks scenario for tech deregulation from FTC to NHTSA and others. And that's why when you look at Tesla and others, the street now is just starting to realize, I think, how this plays out.
So Dan just said something quite interesting there, and quite accurate too. Quote, the street is now just starting to realize. Truer words have never been spoken when it comes to Tesla. And again, I do want to emphasize, it's not Tesla retail investors that move the price of the stock, okay? We don't matter that much in terms of the weight of our capital. Unless things go full GameStop, a retail investor buying 3, 5, 10, 12, 1,000, it's getting up there beyond retail, 10,000 shares even, not going to move the stock. But a big institutional investor buying 5, 10, 15 billion dollars of Tesla stock, building up a massive position over time, those kind of numbers can really move the stock. If there's a bunch of them doing the same shit, that's where things get absolutely ridiculous. And groupthink is real. Herd mentality is real. Social contagion is real. By the way, shout out to the scamdemic. If everyone else is panicking, most people are prone themselves to panic too. If most people are exuberant, well, guess what? That's going to rub off on everyone else. So when it comes to the big money investors, suddenly out of nowhere, Tesla stock having literally tripled and then some in less than a year. And now you have price targets where Dan Ives has gone from 400 to 515, leapfrogging the street high of 421. A massive increase. There'll be more of these to come. Analysts, money managers, and most importantly, the institutional investors are going to start looking around going, wait, what the fuck is going on, bro? Well, this stock was $100 and something less than 12 months ago, and now it's what? On the edge of 500. Did we miss something? Should we buy now? Because after all, the best time to be buying Tesla stock is after it's tripled in the span of 9 months as opposed to at those 9-month lows, right? I suspect we're going to see a domino effect here. I don't know how long it takes to play out, and this prediction obviously is fraught with danger because I don't actually know what's going to happen. But My prediction, my hunch, my gut feel, which is on point more often than not, but it's not perfect, is that we are likely to see a huge influx of big money into Tesla in the coming days, weeks, months, and quarters. As they start to understand what Tesla's doing with autonomy, how it's different from everything else in the marketplace, how Tesla has an unassailable data lead, the true scale, the magnitude of the opportunity autonomy represents. We're talking $10+ trillion opportunity. And suddenly, those same big investors who are concerned about Tesla's gross automotive margins this quarter and last quarter might start to be thinking about the recurring revenue on software, services, and importantly, Robotaxi fares. There was a period of time, many years ago, a couple of decades actually, where analysts looked at Amazon as an online bookstore. They were, and now today Amazon has fingers in just about every pie you can imagine. They're creating content. But the real massive driver for Amazon's surge was when many investors, many on Wall Street, started to realize, remember that word that Dan mentioned before? The incredible amounts of money that Amazon Web Services would print. Launched in 2006, it was a little while before the profits started rolling in and people really started to see the potential. But around that time period, AWS launches actually 2006, right? Stock split adjusted is called $2.20 a share. Amazon stock is up about 100 times since that point. Yet I want you guys to note, 2007, the stock's $194. 2008, $373. Later, in 2008, $189, less than it was a couple of years ago when AWS had launched, a future money printer of money printers. Stock grew at a reasonable rate, right, tripling within a few years. Yet 10 years ago, Amazon stock split adjusted was $14 a share. And in the following decade, as the company continued to scale and execute well, and take the lion's share of profits in multiple industries, the stock absolutely surged, about a 15x over the span of a decade, from what people already thought was an extremely high valuation. And we can learn a lot from the historic example of the surge in Amazon stock, sustained by the way, because here's how things play out with Tesla. The haters will continue to hate. Some of the bears will flip. The cynics will remain cynical. And here's how many will justify the massive surge in Tesla stock from its 12-month lows. They're not going to say, well, actually, investors are brain dead on average, big money, brain dead, blind, didn't see what was happening with autonomy, didn't understand it, didn't get the unassailable data lead. They're stupid, blind, missed the opportunity, and now they're finally realizing they fucked up. No. The actual answer is 1, it's a meme stock, and or 2, it's a narrative stock, and or 3, it's just dumb retail investors bidding the stock up, and or 4, it's all about the hype. The sizzle, not the steak, because after all, Tesla's just a car company. Therefore, it's not our fault for failing to recognize the intrinsic value of Tesla and the massive opportunity. No. It's just a meme stock whose valuation makes no sense. So we're not to blame. We're not responsible for missing this. After all, we're analysts. We're supposed to identify opportunities, not miss them. But it doesn't count because Tesla's valuation makes no sense. It's all about the narrative and hopes and dreams, not tangible reality and inevitable future cash flows. That's what I suspect is going to happen. It's going to be a lot of justification, not saying from guys like Dan Ives, but many others who miss the opportunity, whose job it is to sort of pick the opportunities, right? And by the way, to Dan's credit, he absolutely called this. 6-9 months ago, he's saying 6-9 months into the future, stock's probably a hell of a lot higher. He nailed it. But many of the skeptics are just going to conjure up reasons why they didn't fuck up and didn't miss the opportunity. Psychologically, it's a lot easier for them to do that than admit, you know what? When Tesla was around $150 a share less than a year ago, that made no sense. I should have been loading up. A lot easier to just say, oh, it's not my fault the stock surged. I mean, the valuation makes no sense. Fucking meme stocks, bro. Now, I just want to add something as well. When ARK Invest published their 2029 Tesla fair valuation back in June, I featured it in a video saying that should this play out, by the way, $2,600 per share in 2029, Tesla stock would need to increase by 16 times to reach that. And as I record this today, with Tesla stock over $460 a share, it would now only need to increase. Not by 16 times, not 15, not 14, not 13. I'm going to keep saying them until we get there. Not 12, not 11, not 10, not 9, not 8, not 7, not 6 times, but 5.69 times. One way to think about this is, and if you're a math nerd, don't get too triggered here, we're already 2/3 of the way there. Meaning, we've taken a 10 off that, right? It was 16x. Now it's just 6. The 10's gone. So here's the thing. If ARK Invest are right, or even close to right, or even right within a few years, we're going to be having this exact same conversation about analysts and big money investors having missed the opportunity, not when it was 150 earlier this year, but when it was 480, probably tomorrow. By the way, that was not investment advice. I'm just trolling. And the other thing to understand about analysts, and a lot of money managers actually, are the rules, which you're not allowed to break, because if you break the rules, you go to prison for the rest of your life and you get tortured. So what are the rules? Well, the rules are the following. 1, never, ever display any form of courage whatsoever in anticipating a future outcome that's positive before it occurs. You can never do that. Do that, straight to jail. Game over. Rest of your life imprisoned. However, the opposite does not apply. You are absolutely entitled, in fact, encouraged, implored to not display courage, to not anticipate future opportunities, and to miss them. It's totally fine if a stock you cover, a company you cover, is absolutely dominating. The stock collapses, the valuation makes no sense. It's totally fine for you to not say anything about that and miss it, and then the stock double, triple, quadruple in less than a year. It's okay to do that. That's fine, but don't you dare ever go out on a limb and say, you know what, this is massively undervalued. I'm thinking in the future, we're going to look back and go, man, I wish I was buying at these levels. You can't do that, because if you're wrong, even by a few days or months, game over, in prison, life sentence. So the incentive structure among analysts is completely fucked. It's so rare to see courage whatsoever. Again, I'm going to say this, right? A couple of days ago, the highest price target on Wall Street for Tesla was $421 per share. Not one analyst was above $421 per share. Yet, as I record this, the stock itself is above $421 per share. Doesn't that tell you everything you need to know? And I suspect this is going to be the story of Tesla's life, at least over the next 5, 10 plus years. By the time analysts widely recognize an opportunity, quote, the market has already figured it out, and then analysts are chasing. For example, it was obvious a decade ago, and I mean that literally, by the way, 2014, Model S has been out a couple of years, won every award ever. Tesla was slaying it. They demonstrated that they were able to do what they said they were going to do, that EVs were compelling, and obviously we knew the costs were coming down. Like this was obvious. It was obvious then Tesla was going to absolutely dominate electric vehicles. Most importantly, take the lion's share of the profits. Yet at the time, the narrative from the supposed analysts was the competition's coming, the big boys are coming, just wait till Mercedes BMW. Idiots, because they didn't think. They were too scared to go out on a limb and say, you know what, this startup company is executing incredibly well. They produce the world's best vehicle ever, the Model S. It's won every award ever. They might pull this off. Yet it's only been in the last probably 12 months or so that people have recognized that Tesla's in a dominant position with EVs, because all the companies, the supposed competition that was meant to be coming for Tesla as opposed to embarrassingly fast all over themselves, have started scaling back their EV plans. They're losing tens of thousands of dollars per EV sold. If you're lucky, there's maybe one company in China, BYD, making any money selling EVs other than them and Tesla. It's no one. Everyone else is losing crazy money. It took 10 years for people to recognize what was inevitable, as in the analysts. Now, by the way, there were a couple of exceptions. Shout out to Andrew James and a few others, but the majority. So we're now in a position where it's obvious, it's been inevitable actually for, call it half a decade, that Tesla has won autonomy. They've got an unassailable lead. They're going to take a lion's share of the profit. It's going to be crazy. But how long does it take until analysts, big money investors, like the institutions, actually recognize this? Does it take another 10 years? And then there's the humanoid robot, which even mentioning will get you laughed off the finance media and laughed out of your industry if you're an analyst on Wall Street. How dare you even suggest that Tesla might be successful in scaling humanoid robots? Plus, even if they were, that's many decades away. So how long will it take for analysts, investors, big institutions to recognize what's going to happen with the Optimus humanoid robot? Because they still haven't figured out autonomy. And look, I do have to acknowledge the future is uncertain. All right, you'd have to be a moron to think you can predict the future. By the way, shout out to all the morons who predicted Tesla stock $50 a share. But, and this is an important but, the future is made up of different outcomes, probable outcomes. How likely are certain outcomes? And your job as an investor or an analyst is to think about those possible outcomes and do your best to probabilistically weight them. How likely is this outcome? This is the whole game of investing. If you have an informational advantage, for example, you understand AI, you understand computer vision, you understand the distinction between what Tesla's doing and other companies around autonomy, as opposed to outsourcing your thinking and relying on the supposed expert leaderboards. If you have an advantage over other investors by understanding stuff, then you're in a better position to make a probabilistic guess about a future outcome. Now, it is just a combination of art and science, probably more art than science. But the point that I'm making here is that the incentive structure among analysts on Wall Street, and also actually big institutional investors, is to never, ever even think about a possible outcome until it's already happened. Because if it doesn't manifest itself, or it's late, or smaller than you thought, in prison for the rest of your life. But it's totally fine, like I said, to ignore an opportunity until it's already arisen and the stock's doubled, tripled, quadrupled, 10x, 100x before you finally go, oh, that autonomy thing's actually a big deal after all. So bringing it back to my earlier prediction, I suspect, and it is just a guess, that the penny's going to start to drop for more analysts and eventually some of the institutional investors around Tesla's lead when it comes to autonomy, their point of difference when it comes to autonomy. The stuff that I've been talking about since day one on this channel for half a decade, and privately before that, they're going to start to recognize some of the potential here in the next few months and quarters. But again, I don't think they're going to recognize the full scale of the opportunity. And I'm probably going to have another half a decade of content roasting them about not understanding what's going to happen with Optimus either. So it's progress, but not a lot.
That's why when you look at Tesla and others, the street now is just starting to realize, I think, how this plays out. And that's why I think over the next 12, 18 months, NASDAQ 25,000.
Okay, so that's what this is primarily about. The Trump administration being more friendly for tech. No surprise that you got a parade of CEOs down to Palm Beach, a pilgrimage, if you will, to talk to the president-elect.
I think there's two reasons. One, it's the multiplier. I mean, we've talked about for every dollar spent on an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. So when you look at enterprise, when you look at software, you look at cybersecurity, other parts of infrastructure, I think now you're starting to see that trade spread out because it comes back to it's 10 p.m. in the AI party that goes to 4 a.m. Now behind the velvet ropes, Benioff and others are getting let into the party. But when you look what's happening from a deregulatory perspective in the Beltway, that's why this is setting up for what's going to be a golden era for the AI. And now, from a deregulation perspective, FTC, whether it was deal making, NHTSA when it came to autonomous, now it's just getting started to what we view as really what's going to be just a unique, special moment. But the biggest thing is this is the beginning. Get the engines sort of roaring.
Who wins the most? Who wins the most?
Well, I think Microsoft is going to win the most in terms of from an M&A perspective, and they're going to get aggressive on M&A. I think you're going to see Alphabet and Amazon also continue to expand, not just from a cloud perspective, but when it comes to chips. And I continue to think the biggest winner in all of this, at the top of the mountain, is Musk and Tesla. They continue to be the biggest winner. It was a bet for the ages in terms of Musk betting on Trump.
Now, you got to give credit to Elon Musk for, wait for it, having a pair of balls and actually not only endorsing Trump, but doing so strongly, campaigning in Pennsylvania and really doing an absolute best, right? Good on him. That took courage, which he has in spades. You know what doesn't take courage? In fact, what takes extreme cowardice is the little turds who are whining about Elon getting involved and say, Elon, no, stop, you're hurting Tesla. Oh my God, Orange Man bad, please, Elon, stop. You absolute fucking sausage wallets. Bro, you have any idea how disgusted grown men, actually, that's probably not the word, ungrown boys, you know how disgusted they make me when they're screaming at Elon to not share his opinions, his strongly held beliefs? It's some next level projection just because they're too cowardly to ever speak up on anything that matters, unless doing so will get approval from their social circle, to try and silence Elon, to stop him getting involved. And look how it's panned out. Trump wins a popular vote, absolutely crushes it. A crushing victory, right? Turns out Musk bet on the right horse. But I really do think Dan and many others are overselling the impact of Trump on Tesla. Now, don't get me wrong, it is positive, but it's positive more broadly for the United States in general. Now, to be clear, it is the best possible outcome for Tesla, but is it a stock tripling or quadrupling in 12 months type of scenario? Yep. I mean, I don't think so. I think that Tesla was just massively undervalued for a period there. I am quite curious, by the way, if anyone has seen any of the people who was screeching about Elon getting involved and Elon bad, Orange Man bad, why you support Trump, Elon, destroying Tesla. If anyone said, you know what, that was a bad call on my part. Musk did the right thing. He displayed courage. And funnily enough, apparently it didn't actually have a fucking impact on Tesla stock. I'm a dumbass who was getting swept up in the fear and uncertainty and all the dumb comments from my brain-dead NPC social circle who was saying, Elon bad, look the stock down because Elon bad. Remember, folks, correlation is not causation. Musk has leaned fully into his support of Trump. The guy's got even more projects and children now than he had previously, so the narrative that Elon's distracted, gone. That Elon endorsing Trump was destroying Tesla, gone. Has anyone, well, even a single one of these people said, you know what, I was wrong. I absolutely fucked that call up completely. I got swept up in my emotions and the groupthink of my social circle. Not only did this have no negative effect on Tesla, but turned out to be the right call. Plus, congrats to Elon for having some balls. Respect. Now, just want to wrap up the video by pointing something out again. From its all-time high closing price just over 3 years ago, Tesla's basically flat. You know what's not flat though? The company's execution over that time. They have extended their lead. They're in an even more dominant position when it comes to electric vehicles, autonomy and AI. The US is going to enter a golden era of opportunity and economic prosperity, and a rising tide lifts all boats, including Tesla. The Trump administration is going to be very manufacturing friendly, provide a lot of incentives to companies manufacturing. You notice I'm underscoring the word manufacturing in the US. Why? Because Tesla is one of the world's biggest manufacturers of complicated objects at scale, including in the United States. And this is before they massively scale up their production of the Cybercab and the Optimus humanoid robot, which will happen under the Trump admin. It's definitely a bullish outcome for Tesla. And I have to say, I expected at some point Tesla's valuation would get a little bit more caught up to reality. After all, my Patreon members can fact check me in real time right now. Check out my bull case for Tesla in 2024, the one I haven't updated since July when Tesla was near its lows. For those of you who don't have access, I mean, now's probably a good time to plug Patreon, right? You're up a lot on your Tesla stock. Check the link in the pinned comment to join. Everyone can see the fair valuation. But if you want to see the numbers that actually produce those, the full valuation model, you need to be an investor supporter or above. But as I record this, Tesla stock, having closed today at $466 per share, is now approximately 4.20% off my 2024 bull case, which again was last updated in July when Tesla stock was roughly a third of its current price and everyone was trying to laugh me off the internet. Obviously, it was total coincidence. Now, the reason I mention this is not to flex, because after all, anything could have happened to the stock price. The reason I mention this is just to explain why I was buying the stock hand over fist with every spare cent and then some, shout out to real estate equity, as the stock collapsed, while at the exact same time, analysts were capitulating, bulls were turning bearish, money managers were shrieking about Elon bad on Don't Get Me Started, and even some extreme dumb fuck content creators were, were panicking and selling, and telling everyone they were panicking and selling. Oh my God, dude. Now, the reason I roast these folks is just so hopefully they can learn a lesson. They are absolutely not cut out for investing. They do not have the intellectual and or emotional capacity and or fortitude to do it. So don't try. Sorry, not sorry. Sometimes a coach got to give you some feedback. Not easy to hear, but it's got to be heard, okay? If you're one of the people that panic sold Tesla near the lows of the last 12 months, you do not have what it takes to be investing, period. As opposed to those of you who are loading up, I think you're going to make it. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients. Plus, has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail, legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.